You are listening to the Coinist podcast.
From a founder's perspective, from someone who's actually launched a dApp, what's your view on that? Would you actually choose Ethereum? Is there a better platform to launch an ICO or a dApp on, or is it still too early?
There's not a single doubt in my mind that if I were building Augur again, we would build it on Ethereum.
Okay.
Blockchains, what they afford is censorship resistance and decentralization.
Mm-hmm.
That is if you want to build an application for speed and scalability, don't use a goddamn blockchain. Every single scalable blockchain that has come out since Ethereum compromises on censorship resistance and decentralization. And look, most of the garbage ICOs that exist, most of the garbage decentralized applications that exist actually don't need a blockchain to begin with. And so sure, use an ultra scalable blockchain. Yeah. But fundamentally, if you need censorship resistance and decentralization, which Augur absolutely, without a doubt, does, Ethereum is far and away the best choice. And that is why it's slower. That's why it's less scalable for now. What makes me most uncomfortable right now,
sure,
but something I'm willing to risk, is not moving all into Bitcoin right now with my fund personally. When that
scares you to not move all into Bitcoin.
Yeah, because Bitcoin, the macro environment, the global geopolitical
situation, very supportive.
Is so supportive. I mean, like Bitcoin is going to do well in the next 3 years. I mean, I would always think that.
What does that
mean?
But
the question is, are these alternative crypto assets, are these other blockchains going to be able to reflect the same upside that Bitcoin will have? And the fact is that I don't know, but I'm willing to take that risk because when I think about social impact, like whether these assets, whether these investments will make the world better, I see so much good coming from non-Bitcoin applications and tokens and blockchains, and thus I will hold through Bitcoin outperforming them for the time being, and it is only in the event that I truly develop a 95% or greater conviction that Bitcoin really is going to be the winner here, these alternative crypto assets and blockchains are not, that I would really consider moving. But I think that's kind of contrarian right now. I think, there's some people just holding bags, hoping that they return. But we're doing, my fund's doing just fine. Like we could move into Bitcoin, and we will return multiples on our initial raise. That being said, it would go against the thesis of my fund, and for that reason, and due to my conviction that there will be a return in viable crypto assets that are not Bitcoin, I'm gonna hold my ground, maintain true to my kind of long only position. But it's hard. It's hard when you have.
It's good to hear that because not a lot of people will admit it.
Yeah, it's hard when I have such a clear conviction that Bitcoin's going to do really well in the coming years, and not a clear conviction on how long it will take for these other assets to return, even if they will. But if I know that there's a 10 to 15% chance that these alternative crypto assets and blockchains are going to be successful, I'm going to hold strong with them because they have such a broad opportunity for social impact. I just have to do it.
Are we going to see another alt season again? What are your thoughts there? I know alt season means different things to different people depending on when you got in, but in terms of a cyclical uptrend for alts, you have a lot of people saying, look, it's just never going to happen again. I don't think that's true, but what are your thoughts there?
Yeah, I agree. I don't think to say that it'll never happen is tough. I think what you start to know, so there's been a lot of these mini alt seasons, some lasting like a day or two, so I wouldn't necessarily call that alt season. I think the real last alt season we had was March, where alts did really well.
Until April 1st.
Then
the Bitcoin
until April 1st.
Sure.
Exactly. And so, and the best thing you can kind of take away from that is just understanding what are the market dynamics you need in place to help create an alt season. And so on one end, you think about who's the incremental alt buyer first. And so it's typically going to be retail, and the issue is that a lot of the increment, like there's a lot less incremental, or rather the percentage of incremental money coming in from retail is a lot smaller now than it was before. Part of that is just there's just not a lot of retail coming in, and the other half is you are seeing a lot more institutional money come in now than you did in 2017. And it's hard enough to get institutions to wrap their mind around Bitcoin and see these traditional investors to kind of justify the value proposition. So once you even go beyond that, it gets considerably more difficult. So you're just going to see a lot of the money kind of flow into that. And the problem is it creates this kind of cycle of reflexivity where if you're already in the space, you think about, all right, well, where's the incremental dollar going? Well, I need to be in that. And so it creates this difficult situation where there's not a lot of new buyers for alts. So one of the kind of dynamics you need is flat Bitcoin. We've seen, Bitcoin goes up, alts don't do well, Bitcoin goes down, alts don't really do well. And so the only time where we've really seen flat Bitcoin was March. We were past the bottom and everyone's getting a lot more comfortable. It was crypto spring, and we were grinding up through 3,000, testing 4, and alts were having a field day. You were seeing some ridiculous returns, 5, 10x on some of this stuff. And so the second Bitcoin then broke through 41 April 1st and just started heading towards 5, alts took a beating. And so everyone kind of knew, because I think at that point everyone's thinking back to November of 2017 when Bitcoin really started taking off. Alts were not doing well back then. Alts really did well like second half of December, first week of January. That was peak. And so what happened there was you saw a lot of money in the space. People were taking profits from Bitcoin, or people were kind of getting impatient and greedy and thinking, all right, well, my returns on Bitcoin are a bit limited. I see a lot more upside in these alts. And so alts have done well at like the tail end of a cycle, which I don't think we're anywhere near right now. And in times when you don't really see a lot of upside with Bitcoin. And so right now it's tough to see a situation where you get a prolonged alt season. You could be, a week or two where Bitcoin's flat and very range bound, and you can see, a bit of an uptick there, but it's tough. It's tough to really justify, especially on like a risk return basis relative to Bitcoin. It's tough to justify allocating money to alts.
Is there a diversification benefit from holding those alts, or, since everything's so correlated, does that benefit, does that even help you? What have you guys seen there at Delphi?
No, I don't really think so. There's been a few kind of alts that have had minimal correlation. Binance, BNB has been a pretty solid one where it's been, keeping that in your portfolio with Bitcoin has been great. It's outperformed this year, I think, still to date.
I think it has as well. Yeah.
And so there's value there. And I think part of it is people are thinking to, what they hear in traditional markets, and in 2017 made all the sense in the world to kind of diversify because these things were randomly pumping. So like one of them pumps, I'll move that. And exactly. And so that made all the sense in the world. And I think people are just kind of hoping that comes back, but realistically it ends up being not which alts you're in, but it's like, are you in Bitcoin or are you in alts? And
part of the reason why the derivative space has not really grown to its full size, we think derivatives should be about 20 times the size of spot markets. And right now it's when I got into all this, it was about half. It became 1 time the size. Now it's about 1.5 to 2 times, but nowhere near proper, derivative type size. In crypto today. The biggest reasons why we think that is just trust. It's the same when I got into Bitcoin in 2012 and creating exchanges in 2013. No one trusted exchanges. There was no one was doing cold storage or multi-sig or any of that. And today, in the future space, you've got the same problem. So everyone's doing these cash-settled products, perpetual swaps. They're very, very manipulable products. And a lot of exchanges have these in-house prop trading operations, which puts you at a really big conflict of interest between the exchange, who's supposed to be a neutral intermediary between buyer and seller, and the customer. So we kind of focused on that and creating a trusted derivatives exchange that people can go to.
Everyone, it seems like every single place you look, it's betting on Bakkt. When is Bakkt? Are physically settled Bitcoin futures going to be bullish? Is that going to completely change market dynamic? Is that going to stop some of the manipulation that's going on? You guys are already doing it. What's the difference with physically settled Bitcoin futures that someone that isn't familiar with the difference might understand? What's the current system? How is this better? What's the difference?
Sure. So, what a lot of people don't understand is physically delivered futures are the norm. In traditional commodities and basically any instrument that's deliverable, the physical future trades 98, 99% of the volume. So, talking gold, treasuries, carbon credits, funky stuff, normal stuff, oil, corn, any kind of futures contract that can be delivered, most of the volume is in the deliverable. Now, very little actually goes and gets delivered. People who are traders don't typically ship in a barrel of oil or an ounce of gold, but they trade the deliverable contract. Why? Because that's the one that's safer. That's the one that becomes more liquid. That's the one that that's where all the action happens, because that's where people feel comfortable, and it's also where the real commercial usages of futures can come in. So right now in the crypto game, we've mostly seen speculative use cases of futures. CoinFlex is obviously all about the speculative side, but we're also trying to serve the commercial market, because there's a whole industry that can exist around borrowing and lending that doesn't really exist today in cash settled futures, because it shouldn't. It's too dangerous for that, but can exist in the physical futures side of things. So, just as an example, anyone who wants to, let's say futures and spot are at the same price. It's possible to use dollars or tethers to borrow Bitcoin on CoinFlex. And all you have to do there is buy Bitcoin and sell futures. And then you can take the Bitcoin off platform. You still have your futures hedge. You have to keep some in margin, and you have to occasionally move margin around. But, let's say you took out half of your dollar balances as Bitcoin and sold the whole thing as futures. You're basically hedged. So you have buy 100 Bitcoin with spot US dollars. You sell 100 Bitcoin futures. You've now borrowed Bitcoin, and if the prices are a parity, you've done that for no interest rate. So at a 0% interest rate, you've borrowed Bitcoin.
One of the other new things with your exchange that not a lot of people are familiar with, I had a conversation on Twitter and we were trying to figure out how the hell to categorize this thing. It's called an IFO, right? An initial futures offering. And lately there's been the IEO craze, which came after the ICOs. And I'm sure some people are saying, I've had enough of the acronyms that start with I. With IFOs, I don't think I'll let people decide what it is, but can you explain what an IFO is? Because you recently had one. I think you have another one coming up. What's an IFO so people understand?
Yeah, and we just had to make the acronym something that started with I and ended with. We had some other acronyms that we were going to call it, and we're like, well, but someone pointed out to me, but it doesn't start with I and end with O, so yeah. Maybe and we said, letter F is available, and it actually accurately describes what this is. It makes sense. So, yeah, so an IFO is an initial futures opening, and it's basically the launch of a futures contract for a coin that doesn't exist yet, but has a very high likelihood of existing at some point in the future. So there are a number of projects. Dfinity, Polkadot are the two. We've done Polkadot so already. We're doing Dfinity on Thursday, where basically there's been a large amount of money raised in the private markets. Retail have never really had access to buy the coins. The money has been raised mostly in the form of these things called SAFTs, which are typically only available to high net worth individuals, large funds, basically rich people. Yep. Retail have never really been able to buy these SAFTs. And what we're doing, we're not selling SAFTs, we're not collecting SAFTs, we're actually not interacting with SAFTs in any way. We definitely don't want to touch them. What we're doing is basically we're escrowing or requiring as margin a large amount of tether be put up by sellers who are going to sell futures contracts on Polkadot or Dfinity or what have you. And so these sellers put up, extra margin. They're actually over collateralizing. So it's not 10x leverage. It's like negative leverage, over collateralization. And the buyers get to buy a Dfinity. and they're buying a futures contract on Definity, which if in 6 months or 9 months or however long Definity launches, they will receive physically delivered 1 DFN. So it's kind of a way for buyers to participate in something and for sellers to kind of hedge their risk to something like Definity or Polkadot. Sellers might be some of these large high net worth individuals who participated in an early round and want to get out.
Yeah.
Or sometimes sellers are just people who think, well, Definity is not really going anywhere.
Overhyped. Yeah.
It's overhyped. Short it. Okay, great. And buyers could be anyone. So
What's going on, guys? Thanks for stopping by. Hopefully you enjoyed the highlight video. Every single month I'll put this together. I know that some people don't have time for the full hour or 45-minute long podcast. So this is a way that you can keep up with the top trends, themes that investors, hedge funds, VC firms, analysts, and the exchanges that you trade on, what they're adding to their platforms. You need to hear all that info. So these will be quick, short little clips or highlight videos at the end of every single month. Be sure to drop a like if you did enjoy the video or if you're enjoying the episodes. And also, all the links are down below. So if you want to hear the full conversation, check it out. Be sure to subscribe if you want to see this next month, as well as if you want to see any of the shows in September. We're kicking off a full month of shows. I am really excited. If you're a passive investor or an active trader, there's going to be something for everyone. Thank you guys for stopping by. See you next time.